For more reaction, I want to bring in Mike Englund. He's the chief economist at Action Economics and also a Bloomberg best on GDP. And I know, Mike, that you were watching these net export numbers, which Mike McKee was just talking about. Big drag on the economy. What do you take of this?
Well, you know, the Commerce Department does estimate the last month of the quarter when they put together these figures. And we had an interesting story going on into the third quarter. There was a VAT rebate change in China that had a deadline of July 15th. And the result of that was to produce a real explosion in imports from China between May and July, and that seemed to linger on into August. We're assuming that's going to drop back. But if the BEA didn't make any special assumption about that, they probably plugged a very high import number into the last month of the quarter. So we're assuming that, given that the import growth rate was 17%, and we pegged that number at only 12%. That really was a big surprise in the report.
Right, that was indeed. Okay, so what does this tell you then, Mike, about where we're headed then for the fourth quarter? If that's, if what you just described is true, and it seems that it is true, then are we set up for a better fourth quarter, though?
Well, yes, I think so. And in fact, if anything, we've had a debate through the year between the V-shaped and W-shaped cycle. We started the year looking at the risk of a V. We go into the third quarter looking at the likelihood of a possible W. It looks like we are getting that slow but steady growth rate. It's going to be in the 2 to 2.5 range. And I think this import number suggests maybe this number gets bumped up, and the fourth quarter probably looks a little above 2% as well. Right,
but we're not getting this acceleration that you might expect. It's not going to bring the jobless rate down.
Absolutely, and it's certainly disappointing. We need about 2 to 3% growth in GDP just to tread water. So it's certainly not an encouraging sign, but since the most recent risk to the market was of a renewed downturn, I think many people are probably satisfied that we're getting at least two handles on the consumption growth rate now. If you look at the last 3 quarters, they've all been right in that 1.9 to 2.6 range, a pretty narrow range of positive but slow growth.
Okay, all right, Mike, thank you. Appreciate it. Mike Englund of Action Economics giving his first read on this GDP report.